हेलो एवरीवन, वेलकम टू टुनाइट्स शो। आज हमारे साथ कविता मैम हैं एंड शी इज़ वेरी काइंडली अग्रीड टू टीच अस समथिंग, एंड दिस इज समथिंग जो मतलब स्टॉक मार्केट्स में तो बहुत रेलेवेंट है ही है, बट मोर देन दैट मतलब आई थिंक थ्रू आउट ह्यूमन हिस्ट्री this has been a puzzle, a lifelong thing, and something that you cannot ignore, which is time. सो टाइमिंग हम लोग लाइफ में हर चीज़ होती है, मार्केट में भी हर चीज़ होती है, एंड बट येट वी प्रॉबली डोंट गिव इनफ इम्पोर्टेंस टू इट। बहुत कॉमनली क्वेश्चन हम पूछते हैं कौन सा टाइम फ्रेम में देखना चाहिए। कोई भी स्ट्रैटेजी हम शेयर करते हैं, कुछ भी देखते हैं, मैंने वी आर डूइंग समथिंग, सम ट्रेडिंग इन द मार्केट्स, वी लुक एट टाइम फ्रेम्स, बट हाउ डू यू डिसाइड विच टाइम फ्रेम? हाउ डू यू, वो इंडिविजुअल स्ट्रैटेजीज पे इंडिविजुअली होता है, बट वाई नॉट have a look at time frame from the perspective of being, you know, the main protagonist. आप मेन हीरो की तरह से, पिक्चर के हीरो की तरह से अगर टाइम फ्रेम को देखा जाए तो कैसा होगा, which is what we'll discover today. Kavita ma'am will tell us about time frames and how to decode them. So ma'am, the mic is all yours. Thank you so much for being with us, and eager to learn from you, ma'am.
Thank you so much, Vishu, for reaching out to me. And hello, everybody. I am Kavita Agrawal. I'm the founder of EXP Invest. Before starting about time frame, छोटा सा मेरा खुद का introduction. I've been trading in the market since 10 years now. And 3 साल पहले, like a lot of people during COVID, I started doing this full time. And there's been no looking back. 2 years ago, I also started my own company, EXP Invest, because the whole objective was to just help put out there what I enjoy doing, what I love doing, what I'm benefiting from. And this is something that I thought could actually help people, in terms of improving their income, their lifestyle. So talking about time frames. Now, I see a lot of people debating kaun sa time frame best hai, kaun sa time frame best nahi hai. The simple answer is there is no one best time frame. In fact, if you want to be successful in the stock market, बहुत ज़रूरी है कि आप अपने सूटेबिलिटी के हिसाब से सही टाइम फ्रेम यूज करें। तो आपकी रिक्वायरमेंट क्या है मार्केट में, उसके ऊपर डिपेंड करेगा सही टाइम फ्रेम आपके लिए कौन सा है। फॉर इंस्टेंस, इफ यू आर इंट्राडे ट्रेडर, देन यू नीड टू स्टिक टू यूजिंग वेरी स्मॉल टाइम फ्रेम्स। दो इंट्राडे ट्रेडिंग इज नॉट समथिंग दैट आई रिकमेंड रिटेल ट्रेडर्स टू डू एट ऑल, बिकॉज you have to deal with a lot of volatility. It's very high risk and low return, right? But say if you're a swing trader like I am, then in that case, your requirement changes. You cannot rely on something like a 1, 2, or 3, or a 5-minute time frame. You need a more substantial time frame if you want to look at the stock market for, say, if you want to predict the next 2 to 6 weeks of price activity, right? Then if you want to be a long-term investor, then you have to have a different time frame for that. You cannot depend on an hourly or a 1-day time frame for that purpose, because then in that case you will be dealing with too much noise. So आपकी पर्सनालिटी कैसी है, आपका जॉब आपको कितना टाइम अलाउ करता है स्टॉक मार्केट में देने को, या अगर आप फुल टाइम ट्रेडर भी है तो व्हाट टाइम फ्रेम आर यू कंफर्टेबल वर्किंग विद? There are some people who are okay with sitting in front of the screen and looking at the market non-stop. There are some people who are absolutely not, who want to, don't look at the chart for more than 1 or 2 hours. So depending on what you're comfortable with and where your strength lies, you need to determine what kind of trading you're going to do. And on the basis of that, you have to determine what kind of time frame you want to use. Now, speaking of time frames, you're obviously talking about chart analysis, right? So chart को आप setup कैसे करते हैं, आपका जो layout है उससे आप setup कैसे करते हैं, वो बहुत जरूरी रहेगा in determining whether you succeed or not. I have seen a lot of people referring to multiple time frames, but most of the people do it wrong. How is that? They end up, most of the people use one single chart for all the time frames. That is not a very good idea, because आप जब chart analyze करते हो, जब indicators को analyze करते हो, तो you need to make certain markings. For example, let's talk about the EMA for 2 minutes. You know, the EMA on the 3-minute or the 15-minute or the 75-minute or the daily time frame is obviously going to plot differently on different charts. Now, if you keep shifting the charts, then you don't know where the interaction exactly happened. Say of the 200 EMA on the 75-minute time frame with the price. If you want to have that visibility, you do the markings. But then because you change the time frame from 75 to 15 to daily, you no longer remember exactly what happened where and what does that marking mean for you. तो आप जो analysis कर रहे हैं, आप जो indicators use कर रहे हैं, आपकी जो study है indicators, आप उसको ऑब्वियसली याद तो रख सकते नहीं है. You need to have that visualization in front of you. The best way to do that is to have different windows for different time frames. So after giving this little introduction, I would now like to take you to my charts and give you a demonstration. So thanks, Vishu, for sharing the screen. And as you can see, I have this chart of Is My Trip just by coincidence open on the screen. It's not so much about the stock right now as it is about the time frame. As you can see, my layout has 6 different windows. And the largest window starts from the monthly time frame. It goes down to a factor of 1/5 or 1/4 to the weekly time frame. You will see वीकली टाइम फ्रेम की बात से जैसे जैसे नीचे हम जा रहे हैं टाइम फ्रेम में, द टाइम फ्रेम इज गेटिंग स्मॉलर एंड स्मॉलर. एक्चुअली फ्रॉम द टाइम फ्रेम इज एक्चुअली गेटिंग स्मॉलर बाय अ फैक्टर ऑफ 5 डेली टाइम फ्रेम के नीचे से. व्हाई इज दैट? बिकॉज इट गिव्स मी अ वेरी फ्रैक्टल व्यू ऑफ द प्राइस एक्शन अनफोल्डिंग. लाइक starting with 3 minutes time frame. Okay, 3-minute time frame multiplied by 5 is 15 minutes. 15 minutes multiplied by 5 is 75 minutes. 75 multiplied by 5 is daily time frame. Basically 375 minutes, which forms our daily time frame. Why am I doing this? Because this fractal view is very important. देखिए, आप charts में कौन सा time frame use करते हैं and हर टाइम फ्रेम पे कौन सा इंडिकेटर आपको क्या कह रहा है वो समझना बहुत जरूरी है. इंडिकेटर्स का खुद का जो बिहेवियर है, इट चेंजेस डिपेंडिंग ऑन विच लेवल और विच स्टेज ऑफ द स्विंग साइकिल अ पर्टिकुलर स्टॉक. फॉर इंस्टेंस, इफ द स्टॉक इज, let's take the example of the 75-minute time frame. Now you can see on the 75-minute time frame, if we do the analysis of this little bit, we can see yahan pe, this is when the correction started, this is when the correction was in place, and this is when the correction started to come to sort of an end. So the way the EMA is behaving with the price, or the way the EMA is behaving in relation to the price is changing. Yahan pe the EMA was entirely fanned out because this was closer to the top. And then the EMA started coming into a bunch. Then the EMA started to reverse, and finally the EMA totally panned out. And then now that the price has started taking continuous support near this level, the EMA is in a sort of a wavy or a clustered format, right? So this is the reason why when you're using various time frames, when you're using various indicators, you need to know what is the relation of these EMAs, not just with price of the underlying stock, but with the different life cycles of a swing. See, ultimately, we are all swing traders. चाहे आप intraday trader हो, चाहे आप swing trade, positional trader हो, चाहे आप long term trader. The objective of everybody is simply to buy low and sell high. So, given that basic interpretation, we need to always ensure that whatever EMAs, whatever indicators you're using, you have a proper insight into that. And not just that, these swings, the length of these swings change across different time frames. For instance, what I just discovered with you when seen on the weekly time frame looks like a small correction. So for someone who's considering a long-term investment in the stock, the correction is not something that they would be worried about, because this is a part of the healthy course of price movement. But for somebody who's doing a swing trade, if they had bought the stock somewhere near the level of 49, not having booked the profit when the stock scaled all the way to 75 would be a big disadvantage for them. And they should be worried if they've missed out on a profit of 43% and the position has turned negative on them. Again, for somebody who's doing more, even shorter period of time frame, shorter period trading, for them the 3-minute or the 15-minute time frame will make more sense. So when it comes to decision making, time frame plays a very important part. So for me, suppose I'll take my example here. I am a swing trader, right? And in addition to swing trading, trading for myself and my clients, I also give subscription services. So in the subscription, so what I am trying to do is I'm trying to tell everyone trade setups for swing trading with a holding period of 2 to 6 weeks. Why I'm telling you this is because of my holding period of 2 to 6 weeks, this can also go up to 3 months if a stock is particularly lucrative. The 75-minute time frame I have seen gives me the best insights into swings. So for this purpose, let's choose a better stock than, let's choose Indigo. Okay. Why Indigo? Because Indigo gives really good swings and it's a very good candidate for swing trading. Now, like I said, my target holding period in any stock is between 2 to 2 weeks to it will go up to 6 weeks. My average holding period is usually 21 days. Okay. So here you can see within a period of just 45 days, the stock has given a 30% swing. My objective is that in my watch list of 250 quality stocks, I want to identify these swings and take advantage of them as much as I can, perfecting while trying to or striving to perfect my entries and exits. Now, if I want to say take a trade on the chart of Indigo, my first objective will be to look for a purchasing signal on the 75-minute time frame. But ऐसा नहीं है कि 75 minute पे जैसे ही मुझे positive signal मिला, I will enter it. No, the 75-minute what the 75-minute time frame is saying on the basis of the analysis of my underlying indicators has to be substantiated by 2 other time frames, at least by 1 lower time frame and 1 upper time frame. If I can get 2 lower time frames and 1 upper time frame, it's even better. But I will not go ahead with the position until and unless at least 1 lower and 1 upper time frame agree with the same message that Indigo's 75-minute time frame is telling me. Now, why do I insist on this agreed message? This is called the concept of tick. And when you start demanding your stocks or your potential trade setups to deliver more in terms of confirmation, not just from one price pattern, not just from any chart pattern, not just from your indicator or your defined rules, but also from those same things applied to one time frame higher and one time frame lower, you start making sure that your trade setups are stronger. This will force you to take lesser trades. This will increase the quality of your trades. It will reduce the transaction cost that you have to incur. It will reduce effort on your part. It will reduce effort on reconciliation analysis and maintaining your trade data. It will reduce monitoring time for you. So, for instance, here, the chart of Indigos gave me a positive divergence on the 28th of March, 2023. And this was a pretty good setup. So, after having determined because of XYZ reasons on the 75-minute time frame that, okay, I have say 3 or 4 evidences which indicate towards a potential next up leg in the stock of Indigo. The next thing would be to go back one time frame higher and make sure that the daily time frame is also giving me the same strong story. And when I look at the daily time frame, what I see is that the daily time frame also has a bunch of evidences, like there is the proper moving average support, there is a positive divergence, there is declining volumes on the daily time frame, and they all indicate real strength. Now I will go down to the 15-minute time frame and I will start seeking out, or I will start observing the charts and I will start seeking out negative stories. Now, when you're seeking negative stories or negative evidences, you automatically ensure that you're not letting your own biases kick into your trade setup. So when I'm doing a neutral analysis, I can clearly see that there are indicators on the 15-minute time frame also, like there is a RSI positive range shift, there is clearly been positive divergences in the past in the chart of Indigo. So usually when we are doing analysis, the analysis on the different time frames, like I explained to you, is not going to be exactly the same. You have to make sure that if your primary decision-making time frame is telling you positive, then the 15 with one lower time frame should already be at a stage where it has become positive and is now coming down to take support. So here, the 75-minute time frame has indicated that go ahead and take position. The daily time frame has confirmed that, okay, you know what, the trend which is being suggested by the 75-minute time frame, I am ready to move into that trend. Okay, so the daily time frame is a little later in that story. Why? because things move slower on the daily time. While on the 15-minute time frame, the story which the 75-minute time frame is telling us that I am going to unleash into a bull trend, the 15-minute time frame should have already confirmed that. So the 15-minute time frame has confirmed the positive here. Then it gave a positive divergence and moved into the bullish range shift from the bearish range shift. Okay. On the 75-minute time frame, the confirmation has come to us here. Okay. And on the daily time frame, if we see, also the confirmation has come somewhere around, the confirmation has come here, but the positive story has been building throughout this entire phase. So this is how, using different time frames, we can have a very good depiction or a very good insight into how best deploy. Now, deploy our strategies, deploy different indicators that we use. One more thing that I mentioned to you, that the behavior of indicators and charts change. Now, for instance, I'm going to remove some of the drawing. You can see that on my chart, I keep marking these positive divergences on the 75-minute time frame. Now, if you're wondering on my RSI, what is this fuel lining? I will just give you a quick insight. The orange line on the 75-minute time frame is the RSI of the 75-minute time frame, whereas the blue line is the RSI of the 15-minute time frame. So I ran a special script using, I had to write the code for this using Timescript to make sure that this 15-minute RSI that you're seeing on a 15-minute chart gets visible on the 75-minute time frame. So this was a manual process. It is not something that is inbuilt in TradingView. Okay, so to demonstrate this further, you can see that there are these drawings. Okay, and suppose I have also circled this point where the 500 EMA passing through the 75-minute time frame has lent support to this chart. And what will happen if I change this 75-minute time frame to the 15-minute time frame? You can see the drawings no longer make sense. These white lines, they don't match the points like they were matching earlier on the 75-minute time frame. And here, all you see is a circle. You don't see the EMA anymore on this chart. Because I have changed the underlying time frame of this chart, the meaning of the drawings is now getting lost. The only drawing that makes sense across different time frames is actually your trend lines. And that too only if you're using logarithmic charts across all time frames, right? But if you want to use your drawings to identify or highlight those places where your indicators did something which contributed towards your analysis, then it's very important that you start using drawings. So using drawings on specific time frames for specific indicators is also important in developing that habit of observing the indicators properly. So when you start out in the market, in the stock market, and you start with analyzing your charts by yourself, it takes a lot of training for the eye to identify these intricacies, these signals which the indicators give you, right? So for instance, the positive divergence that I have marked for you, or just being able to visually see where the RSI is interacting with the level of 70. All of these take a little bit of training for the eye. So these orange icons that you're seeing on the screen, I had started drawing them to specifically identify the points at which the 75-minute was touching the level 30. I wanted to see where was the price when the 30 level was getting touched on the RSI for this particular stock. So I had done this exercise manually across different stocks. And just this little exercise gave a lot of insight to me in terms of how the behavior of indicator changes in different market dynamics. Now, this little drawing, now another advantage of using different charts for different time frames is, now that I have set this drawing on the price chart on the 75-minute time frame, when I shift to the daily time frame, I can also see this here. So even though the RSI has changed, the RSI drawing, the RSI plotting has changed because the change in underlying time frame, I still know that it was at this point that the RSI on the 75-minute time frame had touched the level of 50. Now I can do the analysis of what were the different ways that RSI on the daily time frame had behaved when the RSI on the 75-minute time frame touched to 30. And if you want to independently develop your own strategy in the stock market for successful trading, then making these observations on many different stocks, on many different time frames, on many different market conditions like continuous bull market, continuous bear market, sideways market, is going to be instrumental to ensure that you have the right strategy for the right kind of market. All strategies that we use in the market need certain level of tweaking depending upon the underlying momentum of the stocks or the index or the broad market. And if you don't have this study done firsthand, there is a high chance that whatever strategy you develop based on incomplete study will stop delivering from you when the market dynamics change. And change in the market dynamic is something that is going to happen irrespective of whether you're prepared for it or not. So it will be in your best interest to be prepared for that first. So with that analysis of Indigo, let's move on to say IOC and take a quick look at the charts and try to identify what the different time frames are telling. So when I'm doing an analysis for a new stock, I like to begin from the biggest time frame, that is a monthly time frame. I'll take a quick look at the general trend. I'll draw my trend lines, and I will take a sense of what direction the price is going into. So on this IOC chart, I can clearly see that there has been a breakout out of this, what a lot of people popularly know as the flag pattern, right? So the uptrend here is pretty established and it's expected to continue. Taking a look at the weekly time frame again tells me that, okay, the RSI also indicating that a very strong bull trend is underway in the stock, and the volumes are also picking up on the green candles. That is the positive, the weeks when we are experiencing positive growth. Now talking about the daily time frame, here again we can see the same story continuing, that there was a big breakout that happened here with a bunch of strong volumes, right? And since then the price has been going up with higher volumes on the days you're getting green closing. The RSI has been way above the level of 70 on most of the time, indicating that the underlying trend is extremely strong. Coming back to the 75-minute time frame, you can see I have already marked the phenomena of range shift on the IOC chart, and it's looking pretty bullish. Another thing is that the 75-minute time frame recently gave a small negative divergence, and in respect of that negative divergence, the price has corrected down and taken support at the level of 30 and is starting to turn up again. Whether it is a good time or not will now finally be determined by the 15-minute time frame. The 15-minute time frame, again, what we can see is that this correction of basically 7.5% that happened here. So this is the point where we saw the breakout. Okay. Now, because we marked the point of the breakout, we are able to see that on the 15-minute time frame also. And we can see a strong rally has ensued. There was a 12% rally and then a small 5% correction. Overall, since the breakout itself, the stock has given a approximately a 20% rally in a matter of 90 days or 3 months, right? Now, here again, we can see that the stock has started showing a positive divergence, and look at the volume profile. The volume is really starting to dry up, which is an indication that the correction might be coming to an end. If you want, you can also take a look at the 3-minute time frame. Usually, I use the 3-minute time frame more for managing my active positions rather than making new entry setup, new trade setup entries kind of decision. So on the 15-minute time frame, we get the final thumbs up that we need. So even though I have done the analysis really quickly for you, the reason why I've been able to do it so quickly is that IOC is one of the very active stocks of my watch list, and I have been studying this chart for a long time. So I know what is the personality of the stock. I know what kind of tendency it has. And there are a lot of things that I'm right now not telling you about the analysis. There are a lot of things, even in the chart, the way the simple EMAs and the So I'm using exponential moving average, the way the indicators have been plotted, the way the RSI has been plotted. There are a lot of things that are different. But this session is not about all of those things that are different. This session is purely about the time frame. And with my discussion, I hope I have been able to give you a better insight on why it is absolutely worth it for you to take that premium subscription of whichever charting service you're using. Because I know for a fact that a lot of charts withhold the multi chart layout features from members. They keep it only for premium members. But if you're serious about doing your own analysis, then paying that subscription fee will totally be worth.
Right. Awesome. I just have two questions, ma'am. You briefly touched upon it as well. So we saw how to take. The crux of it is you have to look at multiple time frames while making a position, entering a position, and depending on whether you're doing intraday or swing or whatever, you should choose your time frame and then have a confirmation on the lower and the higher time frame. You briefly touched upon it towards the end. For managing your existing positions, you look at probably at a smaller time frame, 3 minutes or 15 minutes.
Yeah.
You want to look at. So we understood about the entry, but what about the exits? Both talking in terms of stop loss and target. So when you are about to close a position, how do we see time frames then? Both in terms of stop loss, how do we set our stop loss at multiple time frames, and when do we book our profits?
Okay. So the whole topic of exiting a position is a lot more complicated than entering a position. Because when you're exiting, it becomes very difficult to identify where has the trend already ended. It is one thing to set up targets. For instance, see, this is the chart of Naukri, right? So I have been long in Naukri since this white pin that you can see, right? Now, since the 6th of March. And this was my target, 5037. So this target has been achieved for the time being. But it's not important to just have a target and then wait it out. Even while we are active in the position, it is very important to manage the positions. So for this purpose, I prefer to use the 3-minute, 15-minute and the 75-minute time frame, with the main decision coming in from the 15-minute time frame. So what happens? I will use this red line to indicate the stop losses where I set it. So what I'm going to do is, and I'm going to use the white line to identify where the potential resistance is. Now, what we do is we obviously initiate every single position with a stop loss. And we revise that stop loss only once the previous resistance zone has been crossed. So for instance, on this chart, when this position was taken, the stop loss was much lower to, not indulge in the unhealthy practice of trying to call out a low. The reason was that when I gave the long call here to my members, the stock was still in a downtrend, right? So I didn't want to be too conservative and try to catch a low, but I had reasons to believe that the stock would turn up here because of this support zone here. And, if a reversal is happening, then it would be very unlikely for the stock to breach this zone. So keeping in mind that the risk-reward ratio at any point of time was 3, I entered into the stock with the initial stop loss being a little bit higher. And I set the first resistance zone somewhere near these tiny little peaks. So whichever point you are entering at, look at the most recent peak or series of peaks from that entry point and set that as your resistance. So this becomes my resistance. Once the price goes above this resistance zone, immediately I'm going to revise my stop loss to the nearest support level on the 15-minute time frame. Why the 15-minute time frame? Because if you look at the 75 or the daily time frame, these levels may not, these peaks may not be very evident. So if you look at the 75-minute time frame, you might consider this to be your peak, this 3846 level, instead of 3584 level, which will basically mean that your stop losses are much bigger. So if you are entering a stock on the 15 or the 75-minute time frame, you want your trend to stay intact on the 15-minute time frame, not on the 3-minute time frame, on the 15-minute time frame. So we will simply keep observing the RSI, we will keep observing the higher high and higher low mechanism. So once the price breaches this level, we revise the stop loss for the first time to the nearest low. Okay. And as we can see, the price came back down here to slightly take a test near this level and then went up. Now, when the price came down, we have our new resistance level. So this becomes the new level where above which we need the price to go in order to revise our stop loss. So when the price gives this breakout, immediately we can revise our stop loss to a higher level somewhere here, basically the previous low. Now, if the price reverses after giving a breakout, if the price basically reverses and comes below this level, if the price would have come below, it's basically creating a lower low, which means the trend has been reached. Now, you see the reason why I also did not move the stop loss too high. A lot of people make the mistake of moving the stop loss to the nearest peak. Now, if somebody would have done that, they would have been stopped out of the position a lot sooner. So we will refer to the nearest or the previous low to revise the stop loss, right? So once that is done, once the breakout happens and the price comes back down to retest the support, so you can see the price then just come down to retest the most recent peak. It also came down to retest the 200 EMA support. Now this 200 EMA is very interesting. So across all charts, I keep the same color coding for all my EMAs. This blue EMA that you're seeing is actually the 200 EMA of the 75-minute time. This proper blue line, this solid blue line is the 200 EMA of the 15-minute time. The reason why I'm doing this is that because 75-minute time frame is my primary decision-making time frame here, I need to have a visibility of something as important as the 200 EMA. So in order to get a reflection, like I said, 15-minute is nothing. The 75-minute is a factor of the 15-minute time frame. I just have to make that multiplication on the EMA. So 200 into 5 is 1000. So when I plot the 1000 EMA, I'll just make a small shift in the style. I'll make the line thicker and I'll make it transparent or give it a 40% opacity. So that makes it still appear on the chart but doesn't confuse me. And I can clearly see on the 15-minute time frame that the stock has come back down to retest this level. And you will see this 200 EMA of the 75-minute time frame was indeed retested multiple times. Okay, so that is something that's very important to always keep in your observation. Now, once this resistance has been breached and the price takes support, we know that we had to revise the stop loss and we did that. Now we wait for the next breakout to happen. Once the stock breaks out, we make the most recent support here. So you can see how close the price came in a spike to the stop loss. But because our rationale here is correct, the stop loss did not get triggered. So in this manner, we will keep moving our stop loss higher and higher until our stock does not, our basic underlying trend remains intact. In this, a lot of people can also get tempted to maintain a much tighter stop loss because the more the price moves, our biases start kicking in. So you will get tempted to, keep tighter stop losses. But using this methodology will help you in managing your positions. Another one last point that I want to add in the arsenal of managing positions is you don't have to look at all your stocks every single day. If you're using TradingView or if your chart software gives you the feature of applying alerts and drawings, then you can use these parallel channels. On the TradingView, you can simply find these parallel channels in your drawing tools. Use this parallel channel to identify the resistance level at which you would like to be alerted and find a support level where you would like to be alerted if the stock touches that. Use that parallel channel and set up an alert on that. So every time this reached on either the upper or the lower side, then you have to come and look at the chart. If the stock is being in a lull state, if it's moving sideways, then don't bother yourself with opening the chart unnecessarily every day, because if you do too much analysis, you will be forced to make too many decisions. And if you make too many decisions, you will not make quality decisions. So at every point of time, at every step, no matter what you do, don't let yourself go into autopilot. Be very mindful. Take things slow, especially if you're new. notice every single thing, and remember that chart analysis is a very highly habit forming activity. So you might have heard this thing that technical analysis is a science and an art. It is a science only to begin with. As far as the formula and the understanding of an indicator is concerned, beyond that it's actually an art, and it requires a lot of practice to be able to use the drawings properly, to allow your eyes to adjust to the behavior of these indicators that you might be using. And there is a lot to discover. So as you can see on my chart, I use the gateway indicators, or EMA and RSI. And these are the indicators that I actually started with. And I have come a full circle in terms of using hundreds of other indicators. And after, like I said, I've been doing this for 10 years. After many years of analysis, I realized that the kind of results, the combination of these two very simple tools were giving me, these two very simple indicators were giving me, it was, beating everything else that I had ever tried in the stock.
Right. Awesome. This was absolutely brilliant, ma'am. But of course, this one session with you was just not enough. Please do allow us to learn more from you. We'll do more sessions on more topics. And thank you so much for this. I just can't thank you enough for it.
I am really honored to be able to speak to your audience, Ishu. I actually love sharing what I do on charts every single day. So I go live on my YouTube channel twice every week. One is called a retail trader session, which I do on Tuesday, and there I just share knowledge. Actually, I am doing a time frame I am doing a session on time frames in one of the weeks coming forward. I'm also doing a session today on the topic of indicators, where I'm covering different indicators, and these sessions don't relate to the basics, because there are too many people out there sharing too many courses, too many basic knowledge, but my idea is to share my practice and what I do for free with everybody, because I really believe that knowledge should be free for everybody. It is the specific skill and service that should only be chargeable.
Awesome. Awesome.
I would love to come and speak to your audience again. It's been great.
Awesome. We'll definitely do it again. We'll find out more topics. We'll discuss more topics and learn so much more from you. That was it. Thank you so much, man.